Have you ever wanted to invest in Bitcoin but have no idea what it's even about or where to start? This is the video for you. All right, so I've done a lot of content around digital assets, but I've never done anything on Bitcoin, which is really the original cryptocurrency that was created. And so in this video, we're going to go over the history of Bitcoin, all the things that have happened over the last 15 years, where we're at now, and where we're going to go in the future, which will be a little bit of speculation. So let's get into it. What is Bitcoin? Where did it come from? What does it do? Why is it important? Well, so Satoshi Nakamoto, which people still don't know who he is, or if it was a consortium or a group of people, if it was affiliated with government agencies, or if it was an independent actor. The story is that this individual or group was unhappy with the banks, the financial systems that existed, and so they created a peer-to-peer cashless transfer of value system, aka Bitcoin. And they wrote a white paper that was out October 31st in 2008, and then the first block, or Bitcoins, were minted into existence on January 3rd, 2009. So for me to really explain this, we're going to have to understand proof of work, what that even means, and how Bitcoins come into existence. So you have miners on a network. These are validators. They run computers. And what they do is they see all the transactions that are coming onto the network, and they basically validate that they happen. And you'll have, potentially thousands of computers that all verify the exact same transactions happened in the exact same order. And that's called a block. Okay. And at the end of that block is a very difficult math problem, which secures the blockchain. Whoever solves it, it's called a hash. And they solve the math problem. Whoever's fastest to do that gets the distribution or rewards on the network for validating that block, and then it locks it into existence. It cryptographically locks it into existence, and nobody can change those transactions for forever. It's immutable. It's always there. People can look at it and see it. And so it's really an accounting mechanism is what it is. But it allows for trust and transparency because everybody can see it, everybody checks it, and you can see it for forever. So the rewards are distributed, and in the beginning of Bitcoin, there were 50 Bitcoin that everybody that solved the hard math problem got for doing so. Over time, that amount has become less and less through a process called halvings. So every 210,000 blocks, which it approximately take about 10 minutes to verify, the rewards that people receive for doing this process are cut in half. So we were at 50, then we went to 25, and then 12.5, now 6.25, and we've got another halving coming up. And this is what's created the cycles for Bitcoin. Every 4 years is about the cadence for which the halving takes place. In order to validate these transactions on the network, it requires energy. You use electricity, and currently the Bitcoin network itself is about the 6th largest economy in the world for electricity. Huh? The US and some other large nations use more electricity than Bitcoin, but the network itself currently is the 6th largest consumer on the planet for electricity, which is crazy to think. And one of the headwinds I think that it will face in the future in its ability to scale. But nonetheless, we'll continue with the history of Bitcoin. So it was launched, again, 2009. We had the first bull cycle, 2013, 2014, went up to, we've had 4 cycles now, all the way up through 2020 and 2021. When Bitcoin got to $60,000 a piece. Obviously, the people that were in early, and back in 2010, 2011, if you got in then and you bought a lot of Bitcoin and you just held, you've made a lot of money, and there are people that have done that. Is there still meat left on the bone? Is it going to $1 million? We'll see. We'll get to that part. So we go on about things. Some of the other main events that happened in Bitcoin's history, the network was forked in 2017. And at that point, obviously a lot of people had heard about Bitcoin, a lot of people had made money in Bitcoin. And so venture capital and other people with significant amounts of money were starting to move into the space and had started to move in, maybe even 4 years prior to that, after the first cycle, when they saw the appreciation on the asset. And so there were 4 large mining pools in 2017 that opposed the increase of the block size. And so at this point, you're probably like, what is this guy even talking about? Why does this matter? Just hold on with me, okay? Hang in there. So there are changes that can happen to the blockchain. And the people that validate the transactions on the network, they get to vote on this. It's kind of a democracy, right? And that's some of the freedom that exists in blockchain and these networks, is there's a decentralized community of people that get to come together and vote on things for how things will progress. Well, there are fees that people have to pay for sending money on the network. And the more volume and transactions happen on the network, the more it costs to do that. And the network can become congested. If there aren't enough people validating and solving the math problems, it can take longer, right? So that's what began to happen as more and more transactions happen on the network. More and more people started to use it because there was more liquidity. It started to become congested. And so Satoshi's original vision was that they would continue to increase the block size, the amount of transactions in each one of those blocks, to allow the network to scale and continue to keep the fees low and the latency. People didn't want to do that in 2017. There were 4 large mining pools. Bitfury and BTCC were the 2 main ones that had received venture funding. I don't know if there's a correlation to this or not, but I'm going to point it out. They were in opposition to increasing the block size and wanted to go with SwagWit, which is segregated witness, basically. And that's how the Lightning Network functions, and we'll talk about that a little bit later. But they opposed the increase of the block size, and so therefore the network ended up getting forked. 51% of the validators decided that they wanted to go that direction. Other people did not. And so you got Bitcoin Cash. People that held Bitcoin in 2017, August 1st, is when the network was forked. You received an equal amount of Bitcoin Cash for the amount of Bitcoins that you held. And obviously, Bitcoin Cash is down significantly since it was launched, because it was launched at the same price that Bitcoin was at the time. Fell significantly from there and has never recovered. Although it is a faster, cheaper way to transmit value than the main Bitcoin network that everybody knows today. So that was mid 2017. And later that year, we got the high of 2017, which was around. What also happened on that day was they launched the Bitcoin futures market. So people were able to short Bitcoin, and obviously had run up significantly. I don't know if you were around back then, but everybody and their mother was talking about Bitcoin on the internet and Facebook and other forums. I wish I had paid a little bit more attention back then, but I did not. And just kind of wrote it off as a tulip bubble, and obviously it came crashing down, and I felt, verified or vindicated in my assumptions later to find out that they were false. So the ability to short Bitcoin happened on that day, and therefore people were then able to control Bitcoin. There's still manipulation of the market even to today, and that'll continue now that they've launched the ETFs, which happened in January of 2024. So these financial products have been launched using Bitcoin as the collateral, the underlying asset. Futures was first. And it's odd to me that the spot ETF took so long for all of these people to be approved. Grayscale, BlackRock, and all the others, Fidelity, they had submitted multiple applications to the SEC for the spot ETF, but had been denied. And then Grayscale took them to court, and the judge ruled against the SEC, stating that they were arbitrary and capricious for approving the futures, but not approving the spot ETF. So obviously they ended up approving it. Now those are live. And so that's kind of where we are today. Bitcoin's currently around $50,000 a piece. A lot of people are very bullish on it. The halving is coming up here in 2024. And so let's talk about that. What would basically increase the price, and why does it go on these runs? Similar to supply and demand, people talk about Bitcoin being deflationary. It's not really deflationary. It's just inflationary at less and less over time because of the halving, right? So less and less Bitcoin comes onto the market. More and more people hoard it. And so there tends to be a scarcity of it. There will only ever be 21 million Bitcoin. That is the total supply. If the current cadence and network sustain itself, that should be pushed out until 2140, I think, is when the last little itty bitty piece of the Bitcoin will be mined on the network. Again, I'm not so sure that it persists that long, but we'll get to that in a little bit. So supply and demand, there's a scarcity factor. The amount of Bitcoin that are coming out of the market gets cut in half. And therefore we see these, large bull runs every 4 years or so has been the pattern up until this point. And we really haven't had full regulatory clarity on Bitcoin. There's never been congressional clarity on Bitcoin. There's just been a posturing that it's a commodity because it has a fixed supply, and that's what it's been designated at this point. Multiple government agencies have alluded to the fact that they believe it's a commodity and it should be governed by the CFTC. So that's kind of where it's landed. And obviously it has some type of regulatory approval. Otherwise there wouldn't be ETFs and futures on the asset. So we're going to say it's a commodity for the sake of this video. And so let's talk about where it's at and where, I speculate. I don't have a crystal ball. Think it's going to go. So like we said before, it's about $50,000 today. We've had the ETFs launch. We are close to the next halving in Bitcoin. Now Bitcoin is tied to the traditional stock market through the spot ETFs. And that can pose some problems because these fiduciaries that hold the underlying asset, they still settle T+2. While Bitcoin is traded 365 24/7, they don't settle that way. They rebalance every couple days. And Bitcoin is very volatile. So let's say it's not uncommon to see a 30% drawdown in Bitcoin, or even a run up in Bitcoin 10% in a day. These ETFs would have a very difficult time rebalancing if we saw that type of volatility in the market, because their settlement's T+2. It's going to be at least a couple days. And then let's say it was over a holiday or over a weekend where that volatility took place. That could be, potentially even 3 to 5 days before they're able to rebalance and settle. And that would lead to significant losses for the firms that are holding this underlying asset, especially if you saw people sell off in droves. So that's a problem. And then aside from that, we've got a stablecoin called Tether that's been recently brought up in Congress by Coinbase and Circle, who has USDC. And they state that people could be using that network and that stablecoin for things to avoid sanctions, to go around the system, around SWIFT and a lot of the KYC AML compliance that's required in the financial system. Is this true? Definitely could be. And they're using a US dollar-backed stablecoin, which they state has treasuries for 75% of the backing for it. But it's never been fully transparently audited. They did have, I think, the 12th or 13th ranked audit firm come in and review their financials, and they passed. Since then, there really hasn't been full transparency on that. So with stablecoin regulation looming and the majority of the liquidity in digital assets and crypto dependent on Tether, there could be severe implications for the broader market as a whole and Bitcoin if we saw regulation come in and Tether did not meet the criteria that has been stipulated by Congress here in the US, and potentially, let's say they outlaw it, or there's some other problems with the network. We've seen it depeg a few times. nothing significant. Tether is not an algorithmic stablecoin. It's collaterally backed and it's not insured. Anyway, there's that, and let's just say that unwound, and there were problems with it. That could definitely cause the volatility in Bitcoin that would cause significant losses for these ETFs now that they are spot ETFs and they're holding the underlying asset. So then again, because they're T+2 and it would take them a long time to rebalance, they'd have to cover from other positions. And that could potentially cause a drawdown across other positions in these companies' portfolios in order to be able to cover their position for the losses to make people whole. So I hope that doesn't happen. I'm just pointing these things out, and we'll see. So I'll give you my 2 cents. Take it for what it's worth with a grain of salt. I don't know everything. They're just my opinions, not financial advice. Always consult your financial advisor before making any investment decisions. I think Bitcoin is like the Napster or the Alta Vista of crypto. I think it's the first mover. I think it has a marketing advantage. I think that there's a lot of people that have gotten behind it because of the idea of decentralized currency and the ability to circumvent the current financial system and all of the problems that people see with it. And so it's gained a lot of traction, and it's also brought that conversation to the forefront, which I think is valuable. I think that it, again, changed the world with the innovation of blockchain technology and the immutable ledger and all of the benefits that that's brought forth. However, because of proof of work, the energy consumption, and all of the other headwinds that it has with the latency and the costs associated with transactions on the network, I don't believe that it'll ever become the peer-to-peer instant payment solution for a global population, like it was hoped for by Satoshi Nakamoto, whoever that was. We also had, and I didn't point this out earlier, so I'll go back to it, 2014, there was an exchange called Mt. Gox that was hacked, and a lot of Bitcoin were stolen from that exchange, which still are, well, some of it has been taken back and should be redistributed back to the people that held it at that point in time. Obviously, it's appreciated substantially since then. My expectation is, those people that lost their Bitcoin at $500 a Bitcoin might sell it at $50,000 per Bitcoin. It's 100x. Pretty substantial for those individuals, right? So we'll see. That's supposed to happen this year as well. There's a lot of potential problems or headwinds, again, for Bitcoin here in 2024. I know that a lot of people are bullish on it. I am not. I think that, not to say that it won't exist into the future with a scarce supply, I think that it could be wrapped and issued on other networks as collateral, and because it does have a fixed supply, it might exist in that fashion. But the network itself, I just don't see a sustainable future for it unless, it migrates to useful proof of work, which is potentially where the miners use green energy or excess energy on the grid that they can then use to mine the Bitcoin and potentially even, incentivize the build out of hydroelectric power across the U.S. by tying into dams that were outfitted with that but never fully realized. So there's certain circumstances in which I think it could drive green energy innovation and continue to persist into the future. But unless that really becomes the mantra of the miners on the network, I think with the progression of ESG and carbon credits and all those things there, I think they're going to find it very difficult, the miners on the network, to continue to be profitable into the future with increasing energy costs and then the potential taxes that would be associated with operation if things progress in that manner. We will see. So that's my synopsis. I hope you enjoyed it. Again, we've gone over the history, where Bitcoin's at, and where I think it's going to go in the future, always with a grain of salt. Again, I don't have a crystal ball. I just like going over these things for people so that they have a better understanding and hopefully can make informed decisions. So if you've enjoyed this, please let me know in the comments below. And if you haven't yet, please like, subscribe, and we'll see you on the next one.